Morning, everybody. Welcome to the Flow Show. It's Friday. Oh, look at me just running in through the door very late. How you doing, everyone? Morning, Kate.
Hey, mate. How are you doing? How is everybody?
Yeah, all good. All good. It's Friday at last. Short one for me. I've got some family coming down, so I'm going to be buggering off after this. You lot can take care of power up Jackson's Hole.
So I'm not part of your family since I'm not invited. Okay.
Trust me, 2 adults, 3 kids, and a dog. You don't want to be involved, mate.
No. Yeah, you can keep.
Yeah, it's going to be like 40 towers here this weekend. Right, let's get ping-ponging into the news and data and stuff. PBOC set the midpoint at 7.1883. Still keeping a leash on that. There's not been too much going on in this over the last couple of days. Pretty steady, hence why the fixes have been pretty steady as well. The Forex flow estimate was 7.1790, so about 93 pips off of that one. Still closer than the 7.2923 estimated by the rest of the market. So doing all right in that little exercise, shall we say. Now China are trying to let's call it what it is, manipulate markets again. They've asked banks to limit some connect bond outflows. So they've been trying to stop currency buys in dollar. They've been trying to stop stocks from going down by asking banks to buy up stocks and do buybacks and whatnot. And now they're going to limit some bond outflows as well. On the domestic front, they're going to issue rules to ease mortgages for some home buyers. This has been touted for quite a while. Some of that is to do with people who are classed as first-time buyers, but if you've already had a property but now don't have a property, you can't be classed as a first-time buyer. But now they're changing the rules so that you can be classed as a first-time buyer again. But some other rules coming in as well. And there's a headline that apparently they're going to cut stamp duty on domestic stock trading by as much as 50%. Another attempt, as mentioned, to keep stocks propped up. Coming over to Japan, and we got the Tokyo CPI data out, a little bit softer than expected, and the last month headline CPI coming in at 2.9% versus 3% expected and 3.2 prior, so a little bit softer there. One of them measures the ex-fresh food number. That's that core number there, coming in at 2.8 versus 2.9 expected and 3% prior. The ex-food and energy came in higher though by a pip at 2.6% versus 2.5%. So a little bit softer on the numbers there. I would say this might have been reflective of some of the prices coming down, particularly import prices for things like oil and energy and stuff over the last 3 months. But we have seen that that's already picking up again. As mentioned earlier this week, gasoline prices are the highest in 15 years. So this might just be a little bit of a temporary reprieve before inflation starts picking up again. Whichever way you cut it, still above the bank's target and not moving wholesale the way they want it to go. Doesn't change the picture much, does it, Kay, these numbers?
I wouldn't say so. I wouldn't say so. Is he? I wouldn't think he's going. He's going to do a victory lap over that. But he may just say, "Oh, look at it! As I predicted, it starts to come off." But really, I don't know. Speaking about Ueda, by the way, he's going into the hole, but he's not supposed to talk much about monetary policy. If I look at the program that they put on there, doesn't look like he's going to have much to say. They have a discussion about globalization at an inflection point, but it's with broadband. Somebody from the WTO and Ngozi Okonjo, but I doubt there's going to be much about monetary policy in there then.
Yeah, and that's on Saturday, isn't it? His
Yeah,
slot?
it is. Yeah, and then those those folks at the Kansas Fed, they said like all times listed below are in the Mountain Time Zone, but there are no times listed, so
Yeah.
we don't even know what time they are talking. So yeah.
Yeah. Well, keep everyone guessing. I would suggest everyone gets on with the rest of their weekend, and maybe Sunday evening before markets open has a look to see what's been said.
Exactly.
Don't spoil your weekend listening to those clowns. Right, speaking of clowns, we'll go on to France, and Finance Minister Le Maire says we will keep lowering taxes for households and businesses. Inflation has started to slow as we predicted. Oh, a bit of a pat on the back for himself there. We will accelerate the process of reducing France's debt, which includes difficult decisions. So sounds like cost cutting is coming into play in France, which will go down well with the population, no doubt. ECB's Centeno, one of the bigger doves over there, says the ECB has to be cautious at the next meeting, and will decide on the rate path at the September meeting. ECB's Nagel must have been watching those PMI data out of Germany closely, because he said we have to be stubborn on policy, more stubborn than inflation. I remember the PMIs not posting very well for Germany, collapsing again in services, but inflation pressures were said to be on the rise in the details. So German central banker there making sure toes the German line on inflation. ECB's Wojcik says Eurozone economy is basically stagnating. It's to be seen whether rates are restrictive enough, and more price data is needed to determine the peak rate. Now, all that came before a bit of a headline drop this morning from ECB sources, saying that momentum is growing amongst the governing council for a pause in hikes as recession fears rise, but that the debate is still open. Policymakers apparently agree that a pause would need to make clear the job is not done and that future hikes could still be needed. Make of that what you will. We know pretty much that the ECB might be one more and done based on inflation. Whether they do it in September or pause it to a later date is really neither here nor there. At the moment, the market, the big risk to market is that they hike and indicate further hikes to come. But I don't think many people expect anything more than the potential for one more hike and then a top rather than a pause, even if they may call it a pause. Coming back to some of the data and yesterday's durable goods and jobless claims. Jobless claims, nothing to read here. Came in at 230 versus 240 expected, so still mooching around that 220, 240 area. We do get the odd spike up to 250, 60s, but nothing to worry about there. Durable goods fell back more than expected. Mentioned this before the show, was expected to pull before the show yesterday, on the show yesterday, was expected to pull back -4%, came in -5.2%. Was some big ticket items in there from the transport sector, which is why that big number there is also a big turnaround from last month. Overall, core goods were up. It was a bit of a mixed picture in the consumer related parts of that produced some ups and some downs, but overall looking pretty good. The dollar actually came off after those numbers, it rallied after those numbers, and I don't know why it rallied, because it wasn't overly good, but jobs were better, still no problems there, so that's probably why, but it was a short-lived move anyway. Just looking at some of the other bits and bobs, Fed's Harker was out as well, saying that the Fed will need to keep rates restrictive for a while. You're seeing evidence that labour market tightness is easing. Sees us keeping rates where they are all this year. If inflation comes down next year, we could cut rates, but we need to see inflation falling before we would be willing to cut rates next year. Then says Fed will have inflation around 3% and the growth will be slowing to trend. So a little bit speaking out of both sides of his mouth there and sitting on the fence and whatnot. You know, could cut, might cut, probably won't cut. Inflation not at a level where they would cut. So no change there from that in terms of what we currently think anyway. Fed Collins said the Fed has more work to do, must be patient and resolute. We may need additional increments, or we may be near a hold point. Extremely likely the Fed has to hold for some time. We may be at a place where the Fed can hold steady. All these lot collecting splinters from sitting on the fence. So much about the possibility of rates. Right, BRICS rubbish. Russian Foreign Minister Lavrov said that BRICS plans to set up alternative payment systems. China Foreign Ministry official also along those lines said BRICS nations should study local currency cooperation, payment tools and platforms, and promote local currency settlement. Brazil's President Lula said BRICS will move forward on a trade currency without the dollar. So lots of talk there about you know, doing away with the dollar in terms of BRICS trading. We'll see what comes of that. Now, part of all the geopolitical stuff that's going on, you may recall Iran has been is on the list to be invited to BRICS, and we're seeing some of that horse trading going on now because US officials apparently have said privately enough that now we all know about it, that they've relaxed their approach to Iranian oil, and that for global oil markets a US-Iran deal is already happening. So just as Iran is looking to join China and Russia and the rest in BRICS, the US is now being friendly towards them. Again, this is all just horse trading between the geopolitical stuff that's going on. You ain't got anything, you worried about anything in those BRICS comments, Kay? Should we all flog our colours?
Worried is not the right thing, but yeah, as you say, there's going to be a lot of back and forth. I think the US may have got the message even before those meetings, trying now to get a little bit friendly with Iran. The funny thing, though, with these declarations of getting away from the dollar is that the BRICS Bank, you know, the new development bank, has I think a capital of $30 billion US. This actually expressed in dollars, so I don't know how they are going to start to move away straight away from the dollars, and it comes right at a time where I've read an article earlier in the week where the amount of dollars going through the SWIFT payment system hit a record high in August. So good luck moving away from the dollar right now. It is something that is going to linger, yeah. So
they've all been doing it anyway, haven't they? They've all been trading in, you know, Brazil's been trading in yuan with China, and Russia's been trading in yuan.
Yeah, and then Russia is already saying that they are not overly happy that India is paying for Russian oil with Indian rupees. So as I said, it's probably going to linger now, and the date for the acceptance or the joining of the new members would be around the 1st of January 2024, and I think between now and then we're going to hear a lot more about that, and possibly, you know, have a little bit of more jockeying and a bit of moves from other blocs like Europe and especially the States, of course, towards Saudi Arabia mainly, because that is, if Saudi Arabia joins as a full member, for instance, that would put the oil output that the BRICS are running at a much higher percentage worldwide, of course. But it's all like, it's not going to happen overnight, and now we're going to have to look at what's happening next, right? And in the meantime, PBOC is fighting against the yuan weakness and keeping everything in check for now. Yeah, I don't think we have a lot more to say or to prepare for Now we've had the BRICS meeting.
Yeah, you can probably stick it in the rearview mirror until the next one.
Yeah, exactly.
One can start getting expectant.
Until the end of the
again.
year, you know, in December things may start to heat up because we're probably going to hear a lot more about it, of course.
Yeah, definitely. Just a couple other bits and pieces, just small bits. German GDP was confirmed at flat for the year, which, sorry, on the quarter for Q2, final numbers there, down 0.2% year on year. Spain PPI was out, down not as much as expected, but still another negative number from those folks over there, down 8.4%. And that's all I've got. Let's have a look. Yep, that's all I've got from Headline Front. There was one bit from US Treasury's Adeyemo, if I pronounce that right, saying he's closely monitoring the Chinese economy, which is showing weakness that has global implications. The US is probably the best prepared to deal with headwinds created by China economic weakness, but just an idea that they are keeping an eye on what's going on over China. You got anything additional to that, Kay? You want to bring to our attention?
Just apparently Atlanta Fed's now estimate for the third quarter GDP has been revised upwards thanks to Taylor Swift and Beyonce and the Barbenheimer phenomenon. Yeah. But it looks as though those one-off also factors could add up to, what is it, $8.5 billion to the GDP. So
wow.
Something. So the estimates for the Q3 GDP in the US are high. So the thing is, if it comes out high, it's probably going to be as expected, and market is going to shrug it off. But that was something out yesterday, made me smile. But anyway, I mean, those people, those statisticians, take everything seriously, right? So that was the other one. And China Construction Bank, which is the second biggest Chinese, let's say, private, if it is be called private, warns of pressure on their profit margins. So that's another one to take into account when trying to trade or looking at what's happening in China. That's another one where we're really saying that the problems are far from over there.
Yeah. Right, let's get stuck into some markets. So you're talking about dollar yen, one's on the screen there, not doing an awful lot at the moment. It's still just edging lower, still pinching new lows in by a few pips. Highs still coming down a bit, but it's flattening off a bit, I would think now. So maybe we found a bit of equilibrium in this one for now, and we'll have to wait and see where it goes. The only key thing I would say is that we're not getting below this 728 and holding below it. I think if we get a signal like that, that would then suggest we're going to see further downside. But for now, yeah, a bit of sideways going on that one. Dollar yen's had a bit of a spring back. Had a decent sell-off, as we saw coming into in latter part of yesterday and into this morning, but then it's had a bounce since, back up into the 146s, pushing up to new, not quite new highs, back up here, the 146.40 area, but it's looking a bit more bullish this morning. If we take a look at yields, we can see why this is getting back to being firmer on the dollar yen. Yield creeping back up, managed to just about hold the 720 area, which is an area I was looking at the other day that if we had broken it, might have spelt bigger trouble for dollar yen. We did nick under it, but we're back above. So this is starting to look like maybe it's just a little bit of a refresh of the trend. It remains to be seen whether we creep higher or not. A lot of the market now sitting back and waiting for power at Jackson's Hole. Do you think we're in one of those situations again, Kay, where the market's trying to make something out of Jackson's Hole that might not actually be there?
Well, my base idea is that Powell is going to be neutral. He went into neutral over the past Fed meeting, right? Saying that we are restrictive now and that we need to find the data and everything. I don't see what he's going to tell otherwise right now. Yeah, we had a little bit of a weaker PMI, but then we had other data which were okay. I mean, if people expect him to give because we've read everything, right, on Twitter or X as we call it today. We've read everything. They may announce that they will be looking at 3% inflation being okay. I think it's absolute crap, right? They've been telling us enough where they are. Personally, I don't see anything specific coming out of him in Jackson Hole. It would be, let's say, it would be a surprise if he does say something. If he does say something, perhaps the risk is of a little more dovish. That's the outside possibility. But to me, it's going to come out completely neutral. And neutral will probably be taken as by the market as relatively hawkish because he's not changing anything yet. And that's really how I feel personally going into the Jackson Hole symposium. To front run the events a little bit, I think actually Lagarde could be a bigger mover than Powell, because if she starts to hint that as the debate is ongoing, nothing is done, and the market was still trying to price in until earlier in the week hikes, and if she says like, yeah, but watch out for the data, we don't really like the data coming out, that may create a bigger wave, in my opinion, for euro and euro crosses.
Yeah.
But yeah, I think, yeah, well, my base case is that Powell is neutral. That's it.
Yeah.
And could be a storm in a teacup. Really. Wow.
Yeah, I mean, I agree with that. I think Powell's got no reason to change his views from the last FOMC. And I think what reaction we have to look for is two things. Okay, we've seen a big uplift in bond yields. We've seen a big uplift in the dollar. If he feels that that's gone too far, then he may comment on that side of things. But if he stays neutral, I think the risk here is that we see a continuation. Okay, the market, what it can often do ahead of data, ahead of central banks, it can have a theme, it can have a bias, it can have a trend. And it will pause going into that event. And if the event doesn't change anything, then it kicks on and carries on and takes another leg up or whatever. I think that's the risk from this one. So even if he doesn't say anything new, if he keeps it the same as the FOMC, the market may say, okay, fine, he's not stopping what we're already doing. So that risk is now gone. So we can continue doing what we've been doing. That means bond yields getting sold and continuing higher, because the theme, the trend has been going on all the way since the last FOMC and all the way through the year. So this move, particularly in the latter part of the year or second half of the year, has been since the last FOMC. So this might be just a little bit of a pause we're seeing here. And if he doesn't shake the tree, upset the apple cart, then we may see that move kicking on. So it's not that he's said something new, it's that he hasn't said something that damages what the market's doing already. So I think that's the main price risk we'll see. So if that happens, everyone will go, oh, he was hawkish and blah, 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 blah. I don't think that would be the market action. I think it'd just be a continuation. Now we're over that risk event. That's my thought anyway.
Yeah, and exactly that. And the thing is, you spoke about those yields. That is perhaps where he may say something, because we know that the U.S. Treasury is ramping up their bond auctions, and that is perhaps a little. That may be the part where he tries to perhaps influence things a little bit, but it's not going to be on the data also front since the last Fed meeting. And if we compare with a year ago, look at where unemployment is and look at where the stock markets are, they are still doing much better than, well, I mean, the unemployment rate is still hanging around the lows, and the stock market is higher than last year. S&P is higher than last year's Jackson Hole, where he was dead hawkish. So I mean, there's for them, if we compare the comparable, there's nothing to be worried about, or to try and say like, hey, we are yeah, we were in the around the 4K 4100 then. So, and we are still at 40, nearly at 4400 right now, right? So
Yeah.
I think he may try to influence things just a little bit, just to not let those yields run, or the bonds collapse too fast. But I think we both agree, if he doesn't say anything, then we see a continuation of what we saw already over the course of the past week or 2 weeks.
Yeah. And as for Lagarde and the euro, I think her tone and what she was saying at the last meeting, which a lot of people took to indicate a potential pause coming, but it was still on the table. I think likely she just kicks the can, because she'll hide behind the fact that they won't make any real decisions until they've had the September projections. If you notice, they use that a lot. They always want the next round of staff projections before making a decision, of which we get at the September meeting. So that's her get out card if she wants to kick the can about that. We could have a situation where none of them really talk about monetary policy. What does the market do then? Just says thanks for wasting our time and cracks on.
Yeah, probably that's have a nice weekend, and now we wait for the next round of NFPs. But yeah, okay. I mean, I've got my personal view on Lagarde. I think she had to be hawkish for a long while, and but I think the risk with her is that sooner or later she turns more dovish again, that she won't be hawkish forever.
Yeah.
She gave the hawks at the ECB what they wanted for months now. But is she going to continue? Okay, I may be completely wrong about that, and she just continues to be relatively hawkish into September, or neutral as well. And then we probably yeah, have a nice weekend, and on Monday we'll see what we do. So that's about it. Yeah, I mean, base case should be that both don't say anything, both don't say nothing at all. But we always have to look at the risks. That's what we traders need to do, right? So the risk on the both sides is perhaps a bit more of a dovish stance. But
yeah,
right, let's see.
Cool. Ali asks, why in many previous speeches Powell has always said inflation might go higher again and economic data might disappoint. Recession could be possible, but recession fears are out of the window now. Can we see an inflation spike higher, or US economic data can still disappoint due to high interest rates? Yes, and yes, Ali. He did say, and this has been a fear of a lot of central bankers. And as I mentioned before, they can be wrong about it on this side of the trade. A lot of them are keeping that line in that they are worried that inflation hasn't gone far enough, or it isn't yet persistently going down towards target. That's their big worry. That's why they keep the hawkish stance in the higher for longer lines in all their speeches. But as I say, they can be wrong about it on this side. If they're wrong, it means inflation has gone lower and it's down towards target or at target, which is what they want. This is different to them being wrong on the other side, saying that there was no inflation, it was transitory, blah, 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 and they got kicked up the arse because of it. So they can't afford to be wrong on that side. They can afford to be wrong on this side. So that's why they keep the caution in there. Plus, it's also so the market itself doesn't artificially take rates down and ease financial conditions and ease what the Fed's been doing, which then doesn't combat inflation or doesn't counter inflation. So yeah, what they talk and what happens is a different thing. They can say they're worried about recessions, but then they can point to the fact that the data is indicated there won't be one. That's fine and dandy. They are walking a middle line here. So yes, of course, inflation could jump higher. We need to watch the next inflation data, the next CPI data, because last month's or the last reading went up on inflation, and the core was still sticking unchanged, I think it was, or it came down a pip or something. So yeah, if we get another month where inflation goes up, then the market's going to get twitchy again and start turning hawkish again. But the central bankers will turn around and say, we told you we were worried about inflation. This is why we're worried. This is why we're keeping hawkish. So it's a win-win for these guys. But yeah, inflation could go higher. Economy could get hit harder on these rate hikes. It's all a data watching game at the moment. We can't do a lot in between all that. But yeah, coming to the euro, and yeah, we're now nudging under 108. As you can see there, we've got a bit of a trend line coming up, which we've touched pretty much now on the head at the moment by a couple of pips. What I would say is we've got a fairly decent option expiry at 108 today, just over 3 billion there. So if the market's just going to mooch around a bit before Powell and Lagarde, we might see it not running too far from this 108 level. But so far, first tap on that trend line has seen a bounce, nothing huge. We're under 108. I think it's going to be a case of where we close the evening tonight. If we close below 108, then we're probably going to be heading much lower. If we close above, unfortunately, we're probably back in boredom range and going back to mooching around the same old levels for a while. So watch out for if there is any volatile moves over headlines, but also look at where we close the week as well, because that might give an indication as to whether we're going to get any follow through or not to any moves we may have seen. There's a few pairs doing pretty much the same thing, tapping on big levels. Dollar CAD's had another look at the 36 handle, pretty much, well, just coming out a couple of pips, a pip under the prior high. So it shows there's enough happening up there when we do break 136. We've not pulled back too far as yet. So it's keeping the move on going. It's a fairly strong bounce. It keeps the range going. Maybe we just widen the tongs a bit onto where we need to set the edges of the range, because we didn't really hold around this 135.70s. So we've got a new marker here up at 136. Still needs a break and hold of that to keep this going, but that pulled back to 135.10, refreshed the trend enough, and we saw a good spring back there. So this one still continues to remain bullish. Another one I'm in, Kiwi, if I can find it. Where are we? There we go. Also tapped the big figure again, went under, made just a slightly lower low, which is never a good sign. So this is another one that's very much in question what happens here. Again, we've got another trend line showing up on there, as you can see from there and there. So that's oh, wonky. That's coming in pretty close as well. But we have to see what happens again, how we finish the week. If we finish the week above 59, then maybe we cement this bottom a bit stronger. Maybe we get a move to 60s and above. Alternatively, below that and below this trend line, we've potentially got another break on, and there's a bit of space underneath. If we do make a break here at this 61.8 fib and the big figure and trend line. Now, I've been long off here and I've been slicing it in the move up to the mid to 60s and 59s. But I've still got my sell stops in this one, and I've kept them the same size. So I haven't reduced them as I've to the same size as the longs that I'm holding. So I'll be a bigger short if we do break and my stops reverse. I'll be a bigger short than I am currently long, because I think if we do get a break, it might have some legs to it. So I'm parking my stops just under that trend line there as well. Kay, do you want to grab it over?
Yeah,
anything in particular?
Yeah, okay, mate. I can have a look at a couple of things. Right. Let's look at the one that I like to look at a lot, and it's bit by George for strength or weakness of euro dollar. And we see that yesterday into the overnight, we've printed a fresh widest in the differentials between the euro and the dollar. If it goes down, it's like the same as the euro dollar. You can overlay it with the euro dollar, as I already said. See a little bit of a rebound this morning. It's basis points, right? It's not a lot. So we see a little bit of a rebound. The euro dollar is stabilizing as well, going into Jackson Hole. This one, you really should have it on your radar come either tonight, where we end up after Lagarde, or on Monday morning to see what the market wants to do with the differentials. They are going to be a driver of what's happening in the euro dollar. We are on relatively low levels, but so we have like about a width of 20 basis points here, call it 210 or 2.10%. And 190. I think that's your directional play in the euro dollar. If you start to break below this 210, it should go. The euro dollar should follow suit. If we start to get back above this 190, then we can start to talk about this one again. Now I'm going to look at the euro dollar. Ryan already showed there's a few trend lines around here which are going to decide upon the euro dollar. But you know, yesterday my level was 108.80. And you can actually, if you overlay that chart with the differentials, this is probably going to be your 190 BPs, and this is probably going to be your 210, or even call it here around 107.60, because we're a little closer to that. And I reckon this is what we are going to have to watch on the euro dollar. Of course, there's a few levels in between. There's the psychological 108 is probably going to be there. At least Powell has the decency to talk after the option expiries and after the Michigan. Is it the final Michigan or the, yeah, it's the final Michigan. So perhaps not too many waves coming from that one. But that's going to be your wider picture, I think, is 108.80 and 107 perhaps and a quarter. And then inside is going to be your 107.60, 108.30s. And then that's probably going to be decided whether you are above or below 108, whether we're going to see those either of those two levels. Of course, the code of the day, speaking about fish and chips, you know, the code of the day, chart of the day, cable, yeah, cable has broken, and we've broken about below the triple bottom, we've broken below the 61.8, and we already traded below the prior low from June. We are hanging around there, which is a bit logic. I don't think that anyone of the big boys is initiating anything ahead of what we are going to hear from Powell, but this is going to be your first level on the top side. Call it 1530, 126, 1530 is where we're going to have to monitor what's going on the cable. I'd argue that for the time being, people may be quiet, waiting for Powell, but looking at this break, which was actually not a really accelerated breaks, getting stops out of the way, and then we stabilize just above, waiting to confirm the break or not. No, it's a break, and it was actually relatively smooth, right? If you look at it, these are several hours, and it just kept on drifting lower. So I'd say that if we don't get too much of a surprise, there may now be model funds also waiting to sell cable, perhaps with a stop above 126.5. I would suspect so, because this is now looking bearish again. If in turn we don't hear anything from the J-man, we could just continue, and then this could ultimately lead us to lower levels, right? This could lead us to somewhere in the 124s ultimately. That's all depending on what Powell will say, or perhaps more importantly, not say at all. So yeah, this is the picture. If you start to get back above, call it 126.5, then probably we are just going to stabilize in this zone here, between 26.20 again and the high 27s, call it 128. So that's going to be an important one. And then Ryan already showed the dollar yen as well, but it's important enough. Okay, technicians will call this bull flag. It is, yeah, you can call it as you wish. Fact is that we are closer to the top end of the latest price action than trading on the underside. And as I say, yesterday I noticed that we stopped right on the 23.6 of this Bank of Japan low, the last Bank of Japan meeting low, to the high. We stopped right on the 23.6 and bounced. So that makes now, I reckon, the 145. We can just either forget about it or just keep a distant eye on it. But I don't think it's going to be as important as it was or should have been. But perhaps the rejection of the move below is important enough. Okay, so now your new level is probably around in those mid 144s. The top side, if we break above, so you can see an extension in the 147s, but there is something to say. So this is your 78.6 where we stopped, but there is something to say, and I hope I did it on the weekly. Where is it? Nah. I think I've killed it, or must have been on another chart. But anyway, this has the looks, if we start to break, for people to psychologically want to take it higher again and go and test 150, where the market expects or fears or expects, or at least expects the more Ministry of Finance jawboning. If we go there very quickly, then it probably increases the risk of interventions. If it's a very, very slow move, as we've already said many times, they will likely not intervene if it's a dollar move rather than just a yen move. And to measure whether it's a yen move or a dollar move, we will have to look at you have to look at the yen crosses. Okay, Kiwi yen is on a not too far from support. Aussie yen is not too far from resistances. Euro yen is very, very resilient still. We can't get below this this trend line. It's around 157 right now. Watch for stuff. If this starts to break, then there may be something different in going on in the yen as well. But for as long as it holds, this is still looking very big. So, and I reckon that MOF is also looking at this weighted index in the yen, and if that continues to weaken, we may not even have to wait till 150 to see any more interventions. But anyway, Mexico still very, very big. This Mexican peso and the weekly euro makes. I'm still, well, people in the room know that I've been short for ages, in and out. I'm still short. Have a look at this. This is the whole move from the year 2000s up to the top in top of the pandemic. And the 50% comes in at 17.75, and that, for the time being, is a bit my target for what's going to happen here. Perhaps if we're back down there, we can see traffic around there as well in the past. Perhaps we are going to build in a pause there, but for the time being, it is very hard to fight this. If you look at the move only from post the GFC, the 78.6 comes in around 1800, so that may be a bit of a psychological level there as well. Yeah, Aussie, Kiwi, Ryan already showed the Kiwi. Aussie is going to have to make a decision. If we get below, stay below 64, the prior low, 63, 60, 65, 63, 40, 50. If that starts to break, then that means the dollar is really in for a bit of a party here, and watch out what could happen there. But for the time being, I would say just respect those lows and don't try to be too clever and try to front run it right now. Top side 64.90, 65 the figure. Interesting enough, if we start to get back above, then the picture for the dollar may change a little bit. And with that, Ryan, I give it back to you.
Thank you very much, mate. Well, I've not got too much more to add to that, and it's a little quiet in the chat this morning, so we'll call that a day today. Be very careful for what's coming later, obviously, with the power stuff. Go and enjoy your weekend. You shouldn't be listening to those clowns 8 o'clock at night. People like Lagarde, obviously, Powell speaking during the normal US session, so we'll keep an eye on that. Thank you, as always, to Kay for all his valued insight. Thank you to all you viewers for coming and supporting us here on the Flow Show. Have a wonderful rest of the day, a wonderful weekend. We'll see you all on Tuesday, because Monday is a bank holiday in the UK, so there's no Flow Show on Monday. We shall see you all on Tuesday. Have a good one, everyone.
Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.